It is my great pleasure to welcome you all to Sergel Nordic Talks, this time with focus on the economic market and strategic focus in the credit management services. And by talks, or Nordic Talks, we are happy to include all of Denmark, Finland, Sweden and Norway online and live here at the beautiful Deichman Bjørvika Library in Oslo. With wind in our hair, we go forward. This is a thought that came to me while sailing in the Baltic and Kattegat seas this summer. And there is more to it than just enjoying the breeze while pushing through the waves. With summer comes well-deserved rest, much-needed rest, but also many opportunities to listen and absorb. My summer was filled with experiences, some challenges, and valuable lessons. And podcasts with fascinating people open new insights, guiding me to explore new paths. Long conversation with loved ones offered fresh perspectives and often new solutions. And with the wind constantly in my hair, it has been a wonderful time for reflection. So what does this seminar have to do with insights from summer? Well, insights to me also generate new questions. Questions that drive creativity and development, foster collaboration and understanding, and with shared development comes partnership that stand the test of time. Understanding needs and possibilities, driving change and positive results, striding forward with quickness in our steps, enjoying the wind in our hair. My name is Christian Hagegård, and I am the moderator for today. Our last Sergel Nordic Talks shared insights on how to set a strategic plan for AI and to get started fast with AI entrepreneur Arli Mujkic, and also Christine Bischoff from Sergel, who all talked about sustainability and caring passionately for not only our planet, but also our society, and not the least, our businesses, building a sustainable economy. Today, we will explore the evolving economic landscape and strategic insights driving the future of the Nordic region with star strategist from big bank SEB, Amanda Sundström. We will also dive deeper into this report and what insights and strategic advice Sergel can offer. For this, we have put together a cross-functional, cross-Nordic team consisting of Louise Matell, Head of Operations in Denmark, Sergel Denmark, Tapio Ojamo, Head of Product Management in Sergel Finland, Niklas Ruus, CTO, Sergel Group, and Sven Ingebretsen, Managing Director, Sergel Norway. We will also talk with Jörgen Karlsson from Sergel Connect about messaging payment services, changing the role in communications landscape, and how reaching customers and employees securely makes a world of difference. Online, you can feel free to ask questions in the Zoom chat. I will do my best to keep an eye on it, but if we don't have time to pick up on along the way, we will reach out to you after the event to answer any questions you might have. I'm happy that we found a way to bring Nordic customers and friends together in this way. Short means transitioning to Swinglish, or Finglish in some cases. But we do our best to make things clear and interesting for you all. And maybe you're thinking, what about Danglish? But I'm sure we are in good hands because Louise Matell's English is Oxford perfect, as my old English teacher would have said. No worries. And finally, without further delay, please welcome Chief Strategist Norway at SEB, Amanda Sundström.
Thank you very much. I'm very happy to be here. Thank you for inviting me over. I am, much as you said, I am the chief strategist here at SEB Norway. I am also FX and fixed income strategist in SEB Sweden as well, typically working there. But I cover the Nordics. I also cover the global macro outlook and the trends that we're seeing in foreign exchange and fixed income. And I will be talking a lot about what happens in the world right now. I'll be talking quite a lot about the United States because that's what's setting the stage for the rest of the world. I will also be going into the different Nordic countries, talking a little bit more specifically about the outlook that we're seeing for the individual economies. So just to start off with the general outlook and the backdrop for what we're seeing ahead of us. What we've put behind us now, as you might know, is that we've had a long period of very high inflation, rising interest rates, and in many countries, quite sluggish economic development. That's not really the case in the US. In this, in this graph that you see here, You see the growth numbers for the US in purple, and then it's the European countries. We have Euro area in orange. Green is Sweden, and blue is Germany. Now, the US has been outperforming, despite having high interest rates, high inflation, and a fairly troublesome situation in political matters and the geopolitical sentence. We see that the United States has been outperforming in terms of growth for both in 2023 and looks set to do so in 2024 as well, even though we do expect the US economy to slow down significantly now in the second half of this year. So this means that the labor market in the United States has been holding up very well. We've not seen unemployment rising in any rapid manner, despite the fact that the Federal Reserve has hiked rates so much. And this is quite particular if you look at the previous sessions where we've had when the Fed has hiked rates in this manner, we've seen unemployment rising faster. And of course, it's very good that we've seen robust labor markets, but it's also meant that inflation has been falling a little bit slower than we would have expected it to do. But we do think that rate cuts are coming. Actually, when it comes to the US, we look set to have the first rate cut from the United States tomorrow already. The Fed is likely to cut rates for the first time in more than a year, hiking rates for a long period and then holding rates unchanged for a long period as well. So this will start off the new phase in this economic outlook. We are now expecting rate cuts to come at a fairly fast pace. We are expecting inflation to come down. So what you're looking at to the right here is core inflation in a different set of countries. Some countries have experienced very high inflation. I'm not sure if I am standing in the way for you, but what you can see in blue here is Sweden. Sweden had a very high inflation rate, but inflation has also come down very quickly. So right now we're in a situation where inflation is actually on the low side. We also look set to have inflation stabilizing around the target that the Riksbank, the Central Bank of Sweden, wants it to, which means that the Riksbank is also one of the central banks that have already been starting to cut rates and look set to cut rates quite quickly now going forward. In a country such as Norway, inflation is taking a little bit longer to come down. We're still at elevated levels, even though we look set to move into a better situation as we go forward. But that also means that Norges Bank, which is the central bank of Norway, have to wait a little bit longer, be a bit more cautious in cutting rates than, for example, the Riksbank. But the US will be the main focus here, and it's already now its main focus. It's not only the largest economy in the world, it's also the most important for financial markets, for global growth outlook, and for what happens when we look at our own central banks, because the tensions that you create when it comes to monetary policy are becoming a lot less tense when the Fed actually starts cutting rates. You also might see here, then if you look into the left chart, that growth is now looking set to be a lot more synchronized, or a lot more in tandem. So while the US has been outperforming for a while, we now see a slowdown in the US economy, which is good because the US economy has been going too well. It's been overheated, so it's coming down, it's cooling off a little bit, which is essential for us expecting rate cuts going forward. Meanwhile, Europe, which has been experiencing a fairly rough start, a rough couple of years, is now starting to recover. And we think that we're going to see a cyclical recovery in Europe. Sweden stands out as one of the countries that is going to experience quite high growth going forward, which is, of course, also a factor that you have to take into consideration when you're a central bank. But we do not expect this to drive inflation back up again. So we think that many factors are contributing to this growth outlook in Sweden. I'll be talking more about that, of course, as we go forward. Europe looks okay. Germany is one of the downbeat economies. We are expecting things to improve, but not necessarily look that very good because we are lacking some of the long-term drivers of growth. But you can see that the picture is that growth will be more in tandem. Inflation is coming down. Rate cuts are expected, and we believe that this will contribute to this picture that we see here with the growth outlook. Employment, this is a very important factor to take into consideration because in previous sessions when we've been on the brink of something that we don't really know, are we going into a recession? then employment and labor markets not been looking this robust as they are right now. In many countries, unemployment is really low. Actually, in many countries, it's record low. Employment is also very high. So household finances are okay, and now as inflation is falling and interest rates are looking set to decline, household finances are improving, which is also going to help growth and also creating this robustness in the economy that we think is necessary for this not to end up in a recession. But it's not going to be without drama, and there are plenty of risks. And I think that what we saw this summer is a very clear example of that. So what happened at the same time as I came back from vacation, I was entering back into work. It was like Armageddon type of markets. Everything was risk off, as we say. So everyone was just taking off risk from the market. So what was it that happened? I think many of you might have seen in the news that stock markets were falling. For those of you who have a floating exchange rate like the Norwegian krona and the Swedish krona, they were depreciating quite clearly. And we saw a sharp rise in risk. So what you see to the right here is something that we sometimes refer to as the fear index. It's depicting the cost of insuring yourself against drops in the stock markets in the US. So when it rises, it indicates that investors are fearing something in the stock markets. And we saw what happened at that time is that we reached levels that we have not seen if you discount the pandemic and the global financial crisis. So what was it that happened? Is it really so that we're looking into something like a financial crisis ahead of us? Well, that's not really our view, but there are several factors that you need to take into consideration. There are several risks that are quite clearly in the market right now and that markets are worrying about. And it wasn't like these things were unknown to the market. It was just that when we were standing here, several factors started to coincide. Things were getting a little bit more negative in many of these risks, moving into a worsening path. So one of them, and perhaps the most important where we're standing right now, is that the market was starting to get scared about the US economy. And this is something that we're talking a lot about, and I will be talking more about it because this is very important. And the outlook that we're standing in front of is kind of binary in its way, because if the US actually enters a recession, none of the things that I will be talking about right now are likely to happen. But we don't expect the US economy to enter a recession. We do expect that the Federal Reserve will cut rates in a manner that actually helps the economy soft land into something that's cooling off, but not really hot. So a slowdown, but no halt, basically. But the market was starting to worry about the recession. And what kicked this off was that we got signals from the labor market that unemployment had risen a little bit more. New jobs were coming in at a lower pace than before. We were also getting signals from the US industry that things were looking a bit worse. So the market started to think that Fed has to cut rates much faster. And then what happens then is that US interest rates are starting to fall. The US dollar started to weaken. Now, this will be important for the next factor here, which is the Bank of Japan. Bank of Japan has been, when everyone else hiked rates, the Bank of Japan kept rates very, very low at negative rates, because inflation has not been a problem in that manner in Japan. Inflation has been very, very low, and they want to get inflation up, much like the situation was before the pandemic, if you look to Norway, Sweden, Europe, the US as well. So inflation is too low. But things have started to change in Japan as well. So you start to see inflation rising, which means that the Bank of Japan wants to normalize its monetary policy, hiking rates. What happens here is that when Japanese interest rates started rising and dollar rates started falling, was that a very popular type of strategy that's been prevalent on the market for a long time called carry trading started to implode. And this is a very technical thing, so I don't necessarily expect everyone to follow with what I say now, but you could call it, so basically, you would borrow in a currency with a low interest rate, and then you would place those money, exchange it to another currency, and place it in a currency with a high interest rate so that you get a pickup from that. And this works very well, unless the currency that you borrow in starts to appreciate or those rates starts to rise. So typical such currency was the Japanese yen, so the currency in Japan. So you borrow in yen and you place your money in dollars, because the dollar in the US, you have high interest rates and it's a very safe type of asset. So you borrow in yen, you place your money in dollars. But what happened now is that interest rates started rising in Japan, interest rates started falling in the US. And these types of strategies could start to implode because you need to cover your losses. So what you need to do is that you need to sell your dollars and buy yen to cover your losses. What happens then is that the yen starts appreciating even more while the dollar falls in value. So you get this spiraling effect. You just have to, that kicks off another round of doing the same thing. So you start getting these very large movements. And I think that this was a very important factor, even if it's very technical, it was a very important factor in explaining why we saw so large movements during this particular time. It is also important to understand this because what we first saw the typical fear markets of the Swedish krona depreciating, the Norwegian krona depreciating, but all of a sudden we start seeing the Swedish krona appreciating, so strengthening. And this is very odd. This is not what we typically see when markets are worried. This is something that we typically associate with the krona depreciating. But what happened here was that the Swedish krona had also been one of those financing currencies, much like the yen. So people had to start selling dollars and buy back Swedish kronas to cover the losses that they made on this type of trading strategy. So this is an important factor, but we do believe that most of these positions, as we say, most of these investors have cleaned out their positions. So this type of unwinding, we don't think that there's too much left of this. There is probably some, but many of them have taken off some risks. So this is not likely to be a very important factor going forward, or at least that might be famous last words from me, but hopefully not. Then, of course, on top of everything, geopolitical risks. Heightening during the summer, the situation is unfortunately deteriorating, both in Ukraine and in the Middle East, adding to worries, although we have not, I must say, even though this is causing a lot of pain, for the humans being involved in it, we haven't seen a lot of it entering the financial markets. We're not seeing a large impact of it in financial markets. But it's, of course, a risk that needs to be taken into consideration for the market. So adding on to the other parts is not going to help. And then finally, and this is going to be important going forward as well, many companies in the US economy are seeing high valuations driven by the fact that you think that AI and technology improvements are going to help profitability in a very strong way. Now, you might have heard of the large company called NVIDIA, who makes these, is a chip maker. It's been moving from, it's just exploding in value. And it's driven by this AI hype and the tech hype that we're seeing. Of course, these large companies are driving the stock markets to a very large extent. So if you start doubting that the profitability that you see from these technological changes are, if you really doubt that that's really going to drive profitability in that way, then valuations of these very, very large companies are starting to fall. And that's something that we've been seeing to a large extent in the US as well. Companies with very high valuations have been a bit shaky. We've seen large drops, massive amounts of money dropping out of the market, because we've seen also a very, very strong growth of this period. So adding all together, of course, what we see is a very jittery market. So when you start worrying about all these things at the same time, you just say, hands off, I'm getting out of this. And that's, I think, a very important explanation to why we saw these very large drops that you can see here. I don't have a driver's license for this one. But we're going to continue to worry about these things. I don't think, as I said, this carry trading factor might be one of the major ones, but the other parts are going to play a role as we go forward as well. AI is going to play a very large role in how we view the potential growth of economies going forward, how we view valuations of the stock markets that are driving these types of markets. And the US recession is something that we're really, really standing in front of right now, and that investors are spending a lot of time worrying about what happens here. So I'm also going to talk a little bit about the potential of a US recession and why we do not see that as the main scenario. Now, I've created this illustration of a traffic light. So there are some factors. As an economist, you try to find these leading indicators. Are there signals of a recession going forward? So some of these signals are saying that we are entering a recession, or some of them are actually saying that we already are in a recession, which we know we're not really. And some of them are saying that we're in a slowdown. So slow down, but not a recession, but keep track of these things. And then some of them are actually saying that we're in a very good position and we might even enter an acceleration phase. So let me just go through these quite quickly and talk a little bit about these factors, because they're going to be very important in judging where we're going forward. And I should say, as I said before, whether the US enters a recession or not is going to be absolutely detrimental for the rest of the economy. It's going to be the main determinant of where we're going for the Nordic countries as well. So this is very important. That's why I'm spending so much time in talking about the US. Now, so the factors that are talking or signaling that we're entering or already now should be in a recession in the US is that historically this has been a very tricky thing to pull off. Historically, when the Fed has hiked rates in this manner, this has led to a recession. It's very rarely so that it doesn't. So that's a very pessimistic way of viewing things. History doesn't necessarily say that it's going to be the same this time, but we need to be cautious of the fact that we actually typically end up in a recession when we have left this type of period behind us. Unemployment is another of those factors. There is this economist in the US called Claudia Sahm, and she created this rule which has accurately predicted all recessions in modern history in the US. It says that when unemployment has risen in a certain amount in relation to a historical period, and that rule is triggered, and that rule tells you that the US economy is entering a recession. That rule was triggered during this summer, contributing to those sell-off fears that we saw that I was showing the last slide. Now, unemployment has risen at the same time as employment in the US, and this is not very typical. So unemployment has risen because more people are entering the workforce. And that's not the same thing as people getting unemployed because they're losing their jobs. So this is, economists always say that this time is different. So I will have to say it once again, this time might be different, because this is not what we typically see. And then finally, we have the yield curve. The yield curve is, so basically, if you have the interest rate today, and then the interest rate very much further in time, what you expect it to be, and then you create a curve out of this, and if that curve is telling you that today the interest rate is higher than further out in history, and that yield curve is inverted, as we say. And an inverted yield curve tends also to accurately predict a recession in the US. The yield curve has been inverted for a period of time. It's not a perfect predictor, because also if you're in a situation where you have hiked interest rates to a large extent and you need to cut them, obviously you're going to have an inverted yield curve. So you're not getting away from this. Either way, you're going to end up with an inverted yield curve. But this is also something that we need to keep track of, and all of these factors are telling us that we might be going that way. On the slowdown side, we have sentiment indicators. Both businesses and consumers have moved from a situation where they're quite optimistic about the situation, coming gradually down to something that is not really signaling either a contraction nor an expansion in the economy. Jobless claims, of course, I said that unemployment was rising because of the fact that that more people are entering the workforce. But if it's actually the case that more people are becoming jobless, then that's going to increase unemployment in a way that's not really the same thing as I said before. So we're keeping a track of this. It's been rising gradually. No alarming signs here. But the American labor market tends to be fast and brutal when it starts deteriorating. Another one of those is mortgage delinquencies. If you stop paying your mortgages, that's also one of those factors that start kind of getting snowballing effect, and it tends to be very quick when it happens. We're not seeing any alarming signs here, but they are indicating a slowdown, and we need to keep track of these. But then there are lots of things that are actually showing something very different than a green light here. Economic growth is still high, and we'd expect it to slow down, but not become very low in any way. Employment is high, as I said, and credit conditions are actually loosening, so they're not tightening. We've passed that phase where credit conditions were as tight as they were, and now we're entering a phase where they're quite loose, and the households' balance sheets, both their assets and their debt, are looking quite good in the US, which is also one of those factors that typically have been very important in explaining why you might see a recession when you have a very tight credit cycle. So there are several factors that are pointing to a better situation than the red ones here. So our view is that we're cooling off, but not crashing in the US economy. The balance of risk has shifted. So we are now in a situation where inflation has become less of a hurdle for cuts. What you see to the right here is core PCE, which is a favorite measure of inflation for the Federal Reserve. As you can see, the momentum here is quite good. We're entering a phase where we're not already now at the target, but we're going to go there if we continue in this direction. In the labor market, what you see to the left is that in orange, that's demand for labor, and in purple, that's supply of labor in the US economy. We've had a situation where we had imbalances, but they've closed now, and we're more into a balance, which is a very good thing if you're a central bank wanting to balance the economy in a way that helps growth in the long run. So what we're standing in front of right now is a situation where we expect the US economy to soft land, but for that to happen, we need to see rate cuts from the Fed. And tomorrow is very certain to be the first step in that direction. The question is only how fast will the Fed go? We expect them to move quite quickly ahead. And the market is also expecting them to move very quickly ahead. We'll see what happens. It will be very, very exciting going forward now. Now, this improvement is also going to play a large role for the development that we expect in the world economy, in the Nordics as well. So what happens in the euro area is going to be important as well. I'm not going to say that the euro is the only thing that is important for the Nordic countries, but you also have a situation where that is going to be kind of the determinant of the direction that we're moving into. The euro area is going to experience a cyclical recovery. So when you start cutting rates and household finances are improving, you see a consumption improvement that's going to help the economies expand going forward. The Nordic countries are likely to outperform. There are large differences between the countries. Sweden and Denmark are two countries that are likely to experience very high growth for different reasons, but all the Nordic countries are likely to experience growth coming from consumption improving again, and factors that have, or sectors in the economy that have been very depressed during this period of high interest rates and high inflation starting to improve. Let me talk a little bit about the different economies in the Nordics, starting off with Sweden. So Sweden has had a rough time for a couple of years. We've had negative growth in 2023. We look set to have positive growth now this year, but not a very high growth rate. Sweden is a highly interest rate sensitive economy where you have a large private sector debt. A lot of it is mortgages, so borrowing for housing purposes. But we also have very short duration on our loans. So we typically have floating loans when we borrow for our housing. And the same goes for many companies. Companies typically have shorter maturities in Sweden than they have in many other countries. And this is something that's common for the Nordics as they are, especially Norway, Sweden, and Finland have very, very short maturities on their loans. Now, as the Riksbank hiked rates and inflation, you saw inflation was very high, that held back disposable income for the households, which then held back on consumption. And that's been one of the main drivers when we explain the downturn in the Swedish economy. Also, a very large part of the low growth in Sweden comes from the fact that construction has had a very, very rough time. So new building starts have been extremely low, dropping very, very rapidly in Sweden. And we've seen construction being under very heavy pressure during this time, both from high financing costs, but also from the fact that the economy is standing a little bit in a standstill. Now, as the Riksbank starts cutting rates, it's going to help the financing part. It's also going to help improving the household finances. It's going to improve consumption. We're going to see a quite fast acceleration in consumption is what we expect. We're not really seeing it already now, although if you look to the right here, if you look to the right here, you can see that in orange here, that's consumer confidence. It's been improving from low levels, coming up here. But we haven't really seen hard data, as we say, real data, following suit already. So we expect it to do so, but we need to start seeing it for that to happen. So it looks like consumers are saying that we do expect the economy to improve going forward, but we're not really sure if we want to spend money already now. We're awaiting this situation a little bit, seeing if it actually goes that way. But we just updated our forecast for the Riksbank yesterday. We now expect the Riksbank to cut rates quite quickly, 1 full percentage point before the year end. They've already cut rates twice. This means that the Riksbank will be one of the drivers of the monetary policy easing cycle. And it's going to be quite quickly moving into 2025, already early spring. We'll end up at 2% in the policy rate. So this is we should view this as some view of what's more normal. So this is what we expect now. You see the market pricing, that's what you see in yellow, is expecting something similar, but it's quite aggressively priced, and that's what we also are quite optimistic, if you want to say, if you're on that side of things, optimistic about how fast the Riksbank can cut rates. The Riksbank itself is saying that it will be quite a lot more gradual. But this, you should note, is from June, so it's an old path, and we're going to get new ones next week. But this is going to help the Swedish economy recover. We expect it to grow quite quickly. Fiscal stimulus that has been held back, the government has said that we don't want to stimulate the inflation, so we need to hold back on spending. Now, as inflation has come down, you can spend much more, and the government has already said that it's going to be expanding the public finances quite a lot going forward. We're getting a new budget on Thursday, but they've already given us quite a lot of information, and we know that they're going to spend a lot more in unfinanced reform space than we've seen before, which is also going to help the Swedish economy recover. Norway is in a slightly different situation. Growth has been quite sluggish, especially. So Norway is one of those countries where you have a very like a separate path for the two parts of the economy. The petroleum sector is driving growth to a very large extent. You have very, very high activity in the petroleum sector in Norway, oil and gas, while the rest of the economy is not doing as good. So you see a clear division in the sectors here. As in Sweden, construction is one of those sectors that are feeling the pain, really, from high interest rates, and you've had high inflation in Norway as well. And the fact that inflation is holding up, being quite sticky in Norway in a different manner than in Sweden, means that Norges Bank, the central bank of Norway, is not going to cut rates as quickly as the Riksbank. That means that sectors such as construction is going to be under pressure for a longer period of time. The Norwegian economy is, however, feeling some spillover effects from the high activity in the oil and gas sector, which is keeping it propped up. The public spending is also quite high in Norway, so you also get some stabilizing effects from that. This means that we typically divide growth into two different sectors. So we look at mainland growth, where we try to separate the effects to exclude the oil and gas sector. And then we have the total growth. So total growth is looking set to be quite high also next year. But then as we move forward, the high investment pace that we've seen for a couple of years in that sector is going to wear off a little bit, turn negative. So that's going to slow down the total economy, while the cyclical factors such as consumption, construction, starts improving first when Norges Bank is starting to cut rates. And central banks across the globe are starting to cut rates because that's going to help exports and the global demand for Norwegian products. So we're seeing this division in the economy that's likely to continue. And if you exclude the oil and gas sector, as I said, it's quite lackluster in the economy. Norges Bank, we expect to cut rates in December. We are, I should say, quite optimistic here. Most other banks, I think here in Norway especially, expect rates to be cut first next year. Norges Bank themselves are saying that the first cut might come in March. So Norway looks set to have to wait a little bit longer. But we think that they might be able to start, as inflation is slowing, they might be able to start gradually moving in that direction. So that's at least the direction that we're heading, which is going to help growth going forward. Denmark is also a country experiencing quite large differences in the sectors within the economy. So the pharmaceutical sector in Denmark has been driving, it's been main driver of growth for a period of time, growing massively. And there's one specific company that you might have heard of, Novo Nordisk, that is producing this weight loss and diabetes medicine. Has been a huge hype around. So this company is the highest valuated company in Europe. It's a very large part of the Danish growth right now. And the pharmaceutical sector is a large part of the Danish economy. So it's not only the fact that this company is growing very rapidly right now, but the division that we've seen for a period of time has just been growing massively in Denmark for this period of time. So what you see in the left-hand chart here is industrial production, so manufacturing sector. So the yellow line is showing you industrial production total economy. And the purple line is showing you without the pharmaceutical sector. So as you see, there's been a recovery in the last few, during the last year, but it's been very slow, much more similar to the development that we've seen in the rest of the Nordics. Pharmaceutical sector is driving growth, and it looks set to continue to be doing quite well because there is a high demand for this type of products. So it's going to help the Danish economy continuing on, but Denmark is not really, the total economy is not really experienced that set or that slowdown that we've seen in the rest of the Nordics. So this is likely to continue, but we're going to see a recovery also in consumer spending. We're going to see a recovery in the other cyclical parts of the economy, much like the situation that we expect for Norway and Sweden. Denmark doesn't have the same type of monetary policy system as Norway and Sweden. Instead of determining the interest rate in that sense, you have a peg. So you have a fixed exchange rate. So Denmark's central bank, the Nationalbank, is managing this instead. So what we've seen is that we've reached, so what you see here is the exchange rate of the Danish krone against the euro. So if you move upwards, that's a weakening of the Danish krone against the euro, but it sticks within a very, very, very tight span. We've reached the top level here, which is likely to be because of the sell-offs that we saw in stock markets. That's also adding depreciating pressures on the Danish krone, but we're not in any situation where we expect the Danish bank to intervene. The Danish central bank is then instead following the ECB. So when the ECB cuts rates, the Danish central bank does the same thing. And just we saw last week, ECB cut rates, and then the Danish central bank followed suit one to one, so cutting rates with the exact same amount. And we think that this is going to continue unless we start seeing a problematic situation when it comes to this span. We don't expect that as the way it is right now. And that's also going to contribute to this, to helping the economy, the rest of the economy outside the pharmaceutical sector to improve. And as a global growth improves, shipping, exports, things like that is also going to help the Danish economy maintain this very high rate of growth that we've seen for a while now. And then finally, I'm sorry to end up in a slightly more downbeat manner, because Finland is not really seeing the same strong drivers of growth, I'm afraid. So the problem here is two things. Well, Finland has an economy that looks fairly similar to the Swedish economy with a very heavy manufacturing sector. But Finland has the euro, so it follows the ECB as well. And the euro, since the euro is not weakened more than it has, it's not getting the same, the manufacturing industry is not getting the same type of help that the Swedish economy has received. Like the Swedish economy is increasing its competitiveness due to the fact that the Swedish krona has depreciated so much. This is not really the situation for Finland. Finland is also having a situation where you have to clean up in your public finances. Government debt is quite high. As you can see here, it's 75% of GDP already now, and we believe that it will increase to 84% going forward. The Finnish government is doing its best to try to clean up in the public finances, which is a very good thing, but it's not really the type of thing that helps stimulate growth where we're standing right now. So for example, they've increased the VAT, so the value-added taxes, to a level that places them among the highest taxation groups in Europe. And it's going to help public finances, which is a good thing, but it's holding back consumption. Households are also holding back on their consumption, even though inflation is slowed to very low levels, and actually wage growth has been quite solid. They're holding back on consumption, kind of just tightening the reins on their own economy. Anyway, I'm not going to say that everything's gloomy in the Finnish economy, because we're also expecting the economy to recover as growth recovers abroad as well. So as you start seeing, I mean, we expect the ECB to cut rates, so that's going to help. We expect the economy to recover around Europe, which is also going to improve demand for Finnish products. It is a little bit difficult to see the bright spots here, but it's going to help that the economy surrounding Finland is also improving. I finally have one last slide, because this is going to be what everyone is talking about in the coming months. It's all about the Federal Reserve. I've been talking about lots of this already, so I'm not going to repeat it again. But I'm going to say that when we look at the outlook for interest rates and the outlook for foreign exchange and stock markets as well, it's all going to be about what the Fed does. So as markets are digesting new information that might tell them where the Fed is going, we're going to see large movements. We're going to have a bumpy road this autumn. It's going to be high volatility. It might not end up in a recession. That's not our view. But we're going to see fears of recession playing a role in the way markets are interpreting things. Interest rates are already at very low levels, or expectations of interest rates, I should say. The market is expecting the central banks to manage this by cutting rates quickly. Unless the situation actually turns out that way, we might end up in a very different situation than the outlook that we're expecting ahead. We're also going to see the Federal Reserve and what happens in the US playing a very large role in determining the outlook for our currencies. The Norwegian krona and the Swedish krona tends to perform a lot better when growth is going well, financial markets are at least complacent, and interest rates are coming down, especially in the US. So we believe that the Swedish krona and the Norwegian krona are going to strengthen, much like the euro, bringing the Danish krona and, Finland has the euro, so it's easy to say, but bringing the Danish krona with them into a stronger phase against the dollar as we move into a situation where the Fed actually cuts interest rates. You can see here that the dollar is correlating very well with interest rates. So what you see here is euro dollar, but it's inverted. So if you move upwards, it's the yellow line or the orange line here. If you move upwards, that's an appreciation of the dollar. And you can see in purple, that's a 10-year US yield or interest rate. So if 10-year yields move up, you expect higher interest rates in the US. That strengthens the dollar, and vice versa. It weakens the euro. And we're going to see this play a very large role going forward as well, because as we continue moving down, the dollar will continue its depreciation, which is going to help the Scandinavian currencies strengthen going forward. I've been talking a lot now, and I hope the situation or the outlook that we're seeing ahead of us is a little bit clearer to you. We do expect a soft landing, but it's a narrow path to walk. So the central banks will have to manage this very, very carefully. And it's going to be a tricky and a bumpy road. We're going to see lots of volatility, lots of uncertainty in the markets, but we still think that most of the factors that we're looking at are pointing in this direction. So an improvement of global growth, a more synchronized growth picture, and a cyclical recovery in the economies that have experienced a high downwards pressure for a period of time. I think I'll stop there.
I'll start up with a follow-up question, because you talk a lot about the Fed. What about the election? Do you have a favorite? In an economical sense, will any of the candidates make a better situation?
The problem here is that the first thing is that depends on very much what you want to do with the economy and how you're going to finance those measures that you're talking about. So Trump has been talking about financing his tax cuts by increasing tariffs. I think that's not going to help global growth. It's not going to be good for protectionism is rarely good for global growth. It's not going to be good for American growth either, even if it helps it protects the American economy. I also think that the tax cuts that Kamala Harris wants to do, financing them with higher taxation on companies and high income takers' capital, it's also not going to help growth. It might cost less in terms of global growth than the most extreme measures that Trump is talking about. But it's difficult to, I mean, both of the economic policies that these two candidates are talking about, none of them are going to help the situation which is most problematic in the US, which is the debt situation. Yeah. Debt is spiraling out of control if you continue on this path, and none of these two candidates are going to do anything about that situation the way the policies are looking right now.
So you're not seeing major differences. One question that's really important for us, I think in Sweden we talked a lot about buying power, that the consumer buyer power is kind of recessed 10 years.
Yes.
How do you see that overall in the Nordics as a forecast? Because you touched upon it, but it means some pure buying power. It translates in our world to payment power to pay on your bad debts.
Absolutely. I think that Sweden has experienced very, as you say, very large drops in real wage. So what we say when we adjust for inflation in wages. It's been a very important factor for the Riksbank in being able now to cut rates quickly, so that's going to help. Inflation is also dropped quickly, which is improving your real disposable income situation, your purchasing power. In Norway, you've experienced a lot less of these drops in real wage, and we look set to have fairly high real wage going forward, because the central agreements that were made here this year are likely to help Norwegian households receive a fairly high impulse when it comes to purchasing power. Denmark and Finland has actually had also fairly high wage growth, lower inflation, not for that particular, I mean, there was a period of time where you had high inflation, of course, in these two countries as well, but it's flattened out and it's very low. So that helps improving as well right now. So I think in general, we're coming from different levels. So Sweden has dropped the most, but all of them are experiencing an improvement in real finances for the household. So that's that's also one of the most important factors for this growth improvement that we're expecting in all of the Nordic countries.
Great. We will get back to this when we're talking to our Cross-Nordic panel. But thank you very much, Amanda Sundström. A round of applause for this fantastic presentation.
Thank you very much. Thank you.
And Amanda will stay on a little bit afterwards for those of you here in the room, so you can ask her some more questions. Now we're going to talk about the messaging service as a game changer, how you in the CMS business can use messaging service to improve recovery rates and also payments on your invoices. So welcome to Oslo, Jörgen Karlsson from Sergel Connect.
Thank you. Happy to be here.
Yeah. Jörgen, this marks a new beginning, taking Sergel's very successful Connect services in Sweden to Norway, doesn't it?
Yeah, this is our rollout. We have been operating in Sweden for quite some time now, and we are happy to be here in Norway to start the rollout.
Yeah. What do you see developing in the business? I mean, what are the kind of services that are important for you?
You know, what we have seen in Sweden is that we are actually building, on this side, we have senders, that is you. You want to communicate with your staff, your suppliers, and with your customers. And you want to communicate with them in a high customer experience way. So we use modern messaging services to the receivers. So the senders and the receivers, and we are in the middle, like a heart. So we care. And we care about that it's safe, secure, and an efficient way to communicate. On top of this, we have built another way. Somebody that wants to get paid. That is actually the seller. And somebody that wants to pay. Normally they do. So we have built payment services. So we both have messaging services and payment services in Sweden operating today. And we know that these are going to work within Sergel Group.
But you don't only work in Sweden, right? You have connections with operators and suppliers.
Yeah, when it comes to our messaging services, we have worldwide coverage. So whomever your customer are, or if they have a Chinese mobile phone, we will be able to communicate with those too. So worldwide coverage when it comes to messaging services, and we have Nordic coverage when it comes to the modern payment services.
But messaging service can be kind of generic, doesn't
Yeah.
it? What kind of effects do you see?
Well, as you can see on the board behind me, these are the effects that we can see, especially from the payment services. When we send out a mobile invoice, for example, that is a kind of SMS payment service, you can see that you have a click rate, 90%. You have a response within 45 minutes. And actually, after that time, you have 40% paying. And those are your customers that has actually just forgot about the payment. They are standing on the bus station, and then you receive this mobile invoice and say, oh, that one, 4 clicks away, they have paid. For example, in Norway with different kind of payments method.
Yeah, but this can't be new to the Norwegian, Danish, and Finnish markets. Why now and why Sergel?
We are a part of the CMS services. Even if we have messaging services and payment services handling micropayments, we know what you CMS customers want. We think we know what you think is important. So we want to roll out that as a full Nordic solution.
Okay. Most of the guests here, I think that you're not directly involved with the company messaging service, but what benefits would you think would be most interesting to everybody here in the room and listening online?
High quality, secure communication, GDPR, of course, and the best of all, you will get payment faster using our technology.
How about mobile invoice? How does that work?
Well, on the board here, normally we send out a mobile invoice. You can use this whenever you want. You can start with this instead of an invoice itself. But if you have a normal traditional way of invoicing your customers, you want to remind those people that has not paid yet. You can do it this easy way. And so when you do it, you receive a code. You click on a link. You can use a bank ID to identify yourself, to see the invoice. And you can use these type of payment methods. In Norway, for example, card, bank transfer, or VIPs. In Sweden, it's VIPs that rules. It's Swish in Sweden, yeah. And I have recently received statistics. So we had a customer trying out our services. They sent like 900 to 1,000 messages. 93% of them were opened within the hour. 83 of all those were paid during the day. Imagine that. Your customer can easily pay what they have forgot to pay because they want to pay.
But you're not completely wrong, actually, because VIPs and mobile pay has gone together for Denmark and Finland and Norway and are entering the Swedish market, but not for Swedish payment, but for payment over the borders. Did you know that?
No, I didn't.
Good. What about secure SMS and other things?
Yeah, we have seen a way of communicating today is with SMS, especially when something happens and when you have incidents or you want to send messages that contains sensitive information. So we have a service, very easy one. You receive an SMS, you click on the link, you use a bank ID to actually read what's in the SMS. So we have governments that using the service and normal companies that want actually to send sensitive information. You don't have to direct them to your home page or whatever. You can use this when you want to use it. When nobody has coverage for wherever, mobile data, you will be able to reach them through an SMS.
And finally, what do you want everybody here to take away?
I want everybody to take away that we care about customer experience. We care about you getting paid because you have delivered services. We have high quality. We've been operating for a couple of years within Sweden successfully. And we know the effects. We know if you're customers, we can do much more together. And if you're not customer, you should be, because we can do so much more together. That's what I want them to take away.
Thank you.
Thank you.
It is time to welcome our panel, the Cross-Nordic cross-functional panel from Sergel on to stage. We have Louise Matell, Head of Operations from Sergel, Denmark. Welcome. We have Tapio Ojamo, Head of Product Management from Sergel, Finland. And we have Niklas Ruus, CTO from Sergel Group. And last but not least, Sven Ingebretsen, Managing Director, Sergel, Norway. Welcome. And I'm very happy that we are here in beautiful Oslo. I think the Deichman Bjørvika Library is super impressive. I want to spend some time here. But to you, Sven, as a Managing Director of Sergel in Norway, you are our host. Thank you. Thank you for having us and sharing the seminar with the rest of the Nordics. We will start out with talking about the economic outlook from your perspective. And we will cover all the Nordic countries. But first of all, what are your thoughts?
Thank you, Christian. There are quite a few insights I would like to highlight when I'm looking from a Norwegian debt collection point of view. In my more than 30 years in the field, I have seen experience debt collection in various economic environments, ranging from high key interest rate to decrease of the key interest rate, and also from back to the 80s. What we see is there's a special periods this crisis, and we always get the question, it must be good times for your industry. However, what we see with the debt collection business, the cycle is fairly stable. In Sergel, we haven't seen any dramatic increase in the debt collection cases so far. What we have seen is there is difference between market segments. So energy stick out. It has been increased for approximately 20% from the last year. But if you compare to telco and others, they are fairly stable. And it's also important that there is a delay in the response from the market, with the increase of the key interest rate, and later with the decrease. And the key interest rates are falling in Denmark and Sweden, but remain unchanged in Norway, at least for the rest of the year, as Amanda said, and maybe that's also a little bit positive. So that being said, the number of cases will probably increase as long as the mortgage rate are high. But what I mentioned about the delay, I think there is no change or decrease in the cases until the next summer in Norway.
Do you see any areas that there are any differences?
Yes. We are seeing people with high income struggling financially. And we are seeing an increase in people who are defaulting mortgages. We are seeing an increase in people over 60 who has payment notes. And we see an increase in people who do not have a buffer for unforeseen bills on 10,000 Norwegian. We also see our Nordic neighbors have been better making down payments on debt, whilst the debt has increased in Norway, including unsecured debt. And we're likely to do it well in competition, but to be the best in debts are not so fun. We also see that Norway spends more than 300 billion on mental health problems and disorders. And what we know, there is a strong link between unsecured debts and mental health problems, and that is worrisome. All this economic backdrop is important for us to be aware of when we do our debt collection.
Thank you. Louise, what is the situation on the Danish market?
Well, as Amanda already explained, it's looking good. We have a massive growth into the market, which is very good for us because then we can actually collect debt a lot faster. However, we do see a decrease in the monthly cases, but that gives us an opportunity to exploit the market situation so that we can increase the revenue. Also, that gives you, our customers, a very good advantage, so you can retain your customers should you wish to do so.
And Tapio, what's your view on the situation in Finland?
Well, not so many positive signals as we heard. For example, the interest is and probably remains on a high level. There is an increased number of the bankruptcies, payment remarks, so the payment ability is decreased on a general level. And what does this mean to the debt collection business? We have identified that the collection volumes itself, there is no big changes on that. It's quite stable. But due to the weak payment ability, there is more and more work to do in order to collect the payments. But one thing that we are really focusing is that due to the weak financial situation of the end customer retention is coming more and more important in the segments of the, for example, telecom and energy. So we are constantly working with our customers to improve that area.
And Niklas, it does look better in Sweden, doesn't it?
Oh yeah. The Swedish economy, as has been stated, is recovering quite well. To add to that, we expect real wage increases in the coming years, and also stimulus package from the government with reduced taxes. However, cost of living is still an issue, and we see little relief for households already struggling. We see that in average debt is increasing quite a lot. We see that the outstanding debt at bailiff has increased by 70% in the last 2 years. The Swedish government is also considering removing interest deduction from unsecured loans, right? Yes. And we will see the effects of those from 2026 onwards. So in conclusion, the Swedish economy is recovering, but we still see an increase in debt collection cases going forward.
So in many ways, a different outlook in each country, with Finland standing out, having further to go before the light in the tunnel, while Sweden and Denmark is bouncing back maybe faster than expected, and Norway is following in 2025. So why is this so important to us? Well, it's part of our doing business and understanding where to go on the market. So we'll talk a little bit about that. Sven, you're also part of Sergel Group management team, and hearing about the market outlook and with this long experience in the credit management services business, what do you see as overarching important way forward?
Well, first of all, Sergel want to be a strategic long-term partner to our customers in the Nordic, and working as one company. We build a sustainable future through insights, innovation, and people, and we will this while being the most caring debt collection debt collection company in the business.
Okay. That's a bold statement. Is the collection business changing?
Yes, in many ways. And it has done some for some time. Not long ago, the mainly focus was recovery rate, not customer retention. And we see a need for both. And with a tougher economic climate in the Nordics, we need to see credit management in a more longer-term perspective.
Yeah, and in this changing business, do you see any examples of important areas where you think Sergel will make a difference?
Yes, I think first, to be true Nordic, it's important to keep working with the process, systems, and function to be more efficient through innovation, digitalization, AI, and process optimization. And we believe continue focusing on and developing BI, advisory, and insight. It's important to be the strategic partner. We also strengthen our organization. Among others, Jim Idefelt, our new head of BI.
We have Jim with us here. Why don't you stand up and everybody can see you? Welcome, Jim, to the business, to our business.
We joined him from Telia and previously from Intro. And I think the building strength is also about self-leadership and business acumen, something that we have focused for over years. And we know it's not enough to only have system and very nice system and tools. We need to make sure that our engaged and self-leadership employees using this system and tools. This has great results, not only in our NPS, but also in the end customer satisfaction and collection rates. So our employees have a great level of autonomy and a great toolbox to succeed to collect in every contact. And as a result, the demand for our services is higher than ever.
Great. Louise, how much of a difference does the human touch play in successful recovery?
Well, I'm happy you asked that question, because now we're all talking about AI. It's on top of everyone's mind, but we still need human beings, and especially in collection. And the reason why is because we want to try and collect in every call and in every contact that we have, which means that we would need a human to do so, because they need to understand the situation that the debtor is actually in. And we need to be compassionate because we care about collection and we care about the debtors. And for us to do so, we educate our employees to be counselors and to give an explanation to the debtor what are the pros and cons for paying their debt earlier on in the process than later on in the process. And it's very important for us that they understand the difference. And to give them also an effortless experience, and to do so by giving a first shot resolution, so they only need to contact us once. Now that Jörgen talked about the messaging service, it's nice that they can get an SMS, and we spend a lot of money on trying to get them to contact us. So when they do, we want to be able to collect in the contact.
But isn't there a risk that the soft touch and we care will result in a lower degree of recovery?
Christian, we need to be soft. We need to be different. We need to treat them with compassion, because it's not fun to owe money, and some of them might have just forgotten, but the others might also be in a difficult situation. We know in Norway the mental health situation is a big issue on the market. So it's important for us to treat them nicely. And with that, we are very proud that we actually have a very high end customer satisfaction. It's at 95% these days, which is very, very unlikely in our industry. And we're proud to have that for many years now.
And it drives customer retention, right?
And it drives customer retention for you guys, so you can get the customers to come back to you and stay there.
Yeah. Any other thoughts to that?
Yeah, Louis mentioned the effortless experience, and I can agree on that. That is one of the guiding principles when we are developing our new systems and services and products. It's nowadays extremely important that we are building the easy-to-use solutions. For example, we need to use the distribution channels that are preferred by the end customers, that they can reach their invoices and letters in a place and time that they want to. Same goes with the payment methods. Those should and need to be as easy as possible to use for the end customers nowadays. Third focus area in our development at the moment is the online portals. And that is extremely important due to the fact that the nowadays customers is used to use self-services instead of personal communication, even though that is extremely important as well in our business.
We have touched on the Nordic perspective, 4 very different markets and different marketing situation. But why is this important and why now?
I mean, there are many reasons to consider a Nordic approach. Perhaps one of the primary ones is that debt collection is a mature and saturated market, and we need to find ways to improve. Being Nordic helps us leverage local knowledge, local resources to create a Nordic infrastructure in its widest sense, to create an environment for innovation and insights and better help our customers.
Yeah, and one example of those kind of innovations that is based on the market insight is our order-to-cash concept, where we offer wider value chain to our customer. And order-to-cash concept includes different service areas like invoice distribution, account receivable, debt collection services, and debt purchases. And I can see that this kind of service combination changes the traditional customer service provider setup to more like a strategic partnership where Sergel and customer together can take the lead to improve the end-to-end process and reach the remarkable achievements.
Yeah, well, I also enjoy collaborating with our Nordic colleagues across all the countries. It's important for us to be able to have the same sort of way of working, the same KPIs. We share workshops across all countries. And the latest very successful stories with my Finnish colleagues here, that they shared that they were using an outbound robot to call out. And we all know how difficult it is to reach people at the other end, to reach your customers. And using that robot has given us an opportunity to see a really high hit rate. And that's been good for us. So that increases, obviously, a cash flow along the way. And obviously, the most important, I think, for me, is our customer success team. We meet on a monthly basis. And we do that to ensure alignment so that you don't experience too much of a difference. Speaking to one person in Denmark, another person in Finland, and so on, even though we have cultural differences and different rules and legislations. But it's just important for us as to align so you get a good experience, and with us as your sparring partner, obviously also focusing on the insights, innovations, and not forgetting about the people.
What are the most important developments going forward?
First, we have efficiency and improved end customer experience using AI and automation. We consider custom AI solutions as the strategic resource and something we need to fully understand and really be in control of. So we are building these AI solutions using in-house resources. And we're focusing right now on enhancing end customer experience using generative AI. So in a few weeks, hopefully, September, early October, we are launching our first AI solution targeting end user or end customer experience, I would say. Second, innovation and modernization. We are modernizing our way using technology. We're modernizing how we are working with technology, how we are thinking about technology, and this change runs through everything. Organization, staffing, tech stack, everything. So the goal here is to create an environment that promotes innovation and continuous improvement. We want to innovate, we want to create, and we want to create value for our customer.
We've been working, maybe not generative AI, but more like a scoring and machine learning related developments for several years. That is the heart and base of our collection processes with differentiated treatment and personalized processes. But everyone is talking about the AI, and there is a great hype around the area. There is one important thing to be remembered, that the change is constant, and we need to build future-proof solutions, even though if it's the AI or more traditional development. But therefore, the clear AI strategy is important to have for all companies.
Sustainable future through insights, innovation, and people, a most caring collection company, was in your opening remarks, Sven. Is that the roadmap forward?
Yes, I think to sum it up, all what the others said, we will continue to streamline and automate with people in the help. We are working, preparing a future collection by focusing in investing our people and technology, and making sure they are working well together. We will use robotization, AI, callbot to free up resources, because we do see an increase in wish that our debtor wish to speak to actual persons to receive financial advice. So we have to do it on technology, but also be personal. Our employees are our most important asset, and we spend a lot of time and resource to educating and involving. I think that's two very important words. And why? We want to be the most caring debt collection company in the business, and providing a healthy economy to creditor and to debtor. We believe in building and maintaining an engaged workforce who are self-leaders. As an important part of this is involving, engaging our employee in future solutions and the way we are working.
And so you talked about building strength through competence, and you talked about people being central in successful debt collection. Can you give us some examples?
Yes. As a part of our training, we are running monthly workshops and to engage and motivate our employees. The last one was in mental health and debt, because there is a growing problem in the society. Earlier, we have done workshops in multicultural understanding and bias awareness, because at least 20% of the population have immigrant background, and that's a significant part of the population. So, and that's all about to have a competence to communicate on the right level.
I think building strength is also about effectivization and the approach we've taken towards AI and automation. This builds in-house competence, so we can better respond to changes in market or customer needs. But you have to keep in mind that strength and competence are objective unless you measure success. So we really need to understand the problem and what we're trying to solve and formulate success before working on new AI features, for instance. So with clear targets in mind, it is also important to follow up and make sure you reach your objective.
And we are quite sure that combining people and technology will secure recovery and retention for our customers. And when we combine insight, innovation, and our experienced employees, we can really deliver at a high level and be the most caring debt collection company in the Nordic.
The next event is on the 7th of November from Helsinki. We're going to talk about partnership. So let's dive into that. Like an open question first. What is a good partnership with our customers for you? Let's start with Niklas and go through.
I mean, a good partnership, from our perspective, is something that not only come with facts, but also having an understanding of the data and how it affects our customer's business, I would say.
Tapio?
Yeah, the transparency is something that comes to my mind first, because you really need to know your customers' processes, way of working, in order to adapt our services and products to work and match in a best possible way together.
For me, it's the courage to challenge and change. A good partnership is about having the courage to ask questions to our partners and for them to be bold enough to ask questions for us on how to optimize and change processes on a continuous basis. So I think that's important.
Yes, I think to have workshop with our customers, to be aware of the customer's pain, and also to be more known that it's easier to work together and also easier to find more efficient solution and sometimes some new solutions.
Yeah. Niklas, you talked about data, I think, and sharing data is one of the struggles due to regulations. But do you see the continued development of new services or way of working overcoming these objects?
Oh yeah, that is absolutely one of the trends we see, both in terms of organizational, or I should say insights on advisory, that extracting data and understanding data and bringing the insights and advisory or advice to the customers, but also integration to customer existing systems through APIs, and so they don't need to they can still continue working in their own systems.
Yeah. And I think Sven mentioned development being customer driven for a long time, but Tapio, how do you see the way forward? Will we see more deep collaborations and development on both sides of the line?
Yeah, indeed, and I can see it as a game changer. As I mentioned, our order to cash concept, for example, it's taking care of the total process from end-to-end perspective, and that is something that could be done only as being real partners together.
And if we look at customer retention, I mean, we are taking big strides in improving the soft touch and the relationship and 95% customer and satisfaction. Is that something we can also kind of help our customer with in the early stages when it comes to reminders or even the O2C, the full chain of debt?
Yeah, I think it's our best job as your sparring partner to give you the best advice on how to communicate, because we have the knowledge already. We know when the customer forget to pay their bill, and we know what to say to them, and we can then speed up the process and help you with the communication and the letters, and we can take that process away from you also as an opportunity. But when they do get into collection, it's important for us to keep educating both you and your customers on how expensive it is not to be able to pay your bill. So yes, I think that we have a lot to talk about together.
Sven, a difficult question maybe, but we're talking a lot about strategic partner. Just in a few words, is that always necessary? Are we a supplier, or is there a real need for somebody that can show the way forward?
I think from the manager part, we have to be clear in our strategy, and we have to be clear in over the next technology step, because our customer have to see what they can expect from us. And I think to go from a customer to a partnership will also open up for better solutions and a more a long-term good business.
Now, we had a fantastic guest here with Amanda Sundström. Do you think these kind of partnerships, this is also a partnership, is vital to the business, not only to us, but also to our customers' understanding of the way forward and how to make the right decisions?
Absolutely.
Yeah.
I think to can see and get some information what's happening in the future, how we can take advantage of that, and also in what we are building in systems or our thoughts on the future. I think that's absolutely necessary.
You all had a chance to dive into your different markets. Was it a new experience, or was it what you expected?
I'm a tech guy.
You're a tech guy, so you're always involved in the economical market, yeah.
Yeah.
I think we know there is some difference from the market to market in the Nordic, but we also have seen through how we work together in our function fora that there is a lot we can do together. There's a lot we can save, but only do a project in one country instead of 4 countries. We can save time, we can save money, so absolutely we are different, but also there's a lot areas we can take advantage of.
Thank you, Sven, for those final words. This panel is an example on how we can put together teams for you, cross-Nordic and with different functions and specialities and backgrounds. So thank you to all of you. Thank you, Louise Matell, Tapio Ojamo, and Niklas Ruus for sharing your thoughts. We also say thank you to Amanda. The thoughts and advice on the future of credit management service in the Nordics. If any of you in the audience have further questions, don't hesitate to ask questions to us here after the event or in the chat box, and we'll get back to you online. If you like the Sergel Nordic talks and would like to hear more, our next seminar, as I said, will be on the 7th of November from Helsinki. We haven't exactly set the details, but it will be about partnership. It will be around lunchtime, so if you want to square off some time in your box because of the time change or difference between Finland and the rest of the Nordics. And if you want to continue these discussions that we've had today, feel free to contact us and set up a meeting, and we'll see you soon. Thank you for participating and for me having the pleasure of being your moderator. So see you soon. Thank you.